Hey guys, this one's a little bit different to what I normally do, right? And especially for the public. These are the kinds of videos that I tend to do for the members in the Discord channel. So, one of the big things over the last maybe 2 to 3 weeks is I've joined a couple of other social media platforms and things like Reddit, Medium, for example, and I'm kind of seeing a very similar message, a very similar tone in terms of just where people are struggling. And I think this is kind of key, especially from my own personal experience, right? So what I want to do, I'm going to share with you almost a quick overview in terms of how to try to simplify this for you, right? And this is the kind of thing that, a lot of people kind of almost don't see until they've blown an account and then they really want to come to learn. But I think this is really important. And although I can summarize it by saying, psychology, emotions, and managing your emotions, I think there's a little bit more depth to this, right? So when I first started trading, I was, really keen to find an edge, right? Find that silver bullet, ultimately something that was going to give me 100% win rate. I could kind of risk everything, kind of go all in. I started looking at things like, news feeds. I was paying for Bloomberg and CNBC and all the kind of the premium things that you could buy, 65-inch TV on the wall. I was, using eight screens, eight monitors. And I guess even down to the charts, right? I was looking at how many indicators I had on the chart. I was looking at how many time frames I was assessing, how many instruments I was trying to get into and get an understanding of. So what I want to do, I want to share first of all something, right? And this is just going to help, straight away in terms of the basic kind of concept, right? So this is something that I shared recently with the group. And this image is something you almost want to burn into your brain, right? This is something that, once this clicks, trading just becomes an awful lot easier, right? And just again from my own personal experience, I've gone from eight screens, 20 indicators, 20 different time frames, all the data that I could actually manage, down to a 13-inch laptop. I work from the garden. I don't even edit these types of streams, right? I just kind of put them out there, and this is what it is, right? So, in the grand scheme of things, once you understand what the market dynamic is doing, right, and the way that it seeks liquidity, you'll get to understand that things like Elliott waves and Wyckoff, the reason that these things still work, 100 years down the line, is that it's sentiment analysis, right? It's judging and finding what humans, what retail traders, what they're looking for, right? And on top of retail traders in terms of entries and exits and stop losses and blown accounts, it's the bigger players, Composite Man, the institutional players, right? And it's how these guys can control the price. But retail are almost doing the damage to themselves, right? And this is where the emotions and the psychology and this, that, and the other comes in. Right? So I've taught and I teach lots of different aspects of how the market kind of comes together, right? A lot of people will talk about things like ICT and smart money. Others will talk about Wyckoff. Others will talk about Elliott. And the truth of the matter is, there's kind of a combined synergy, I guess, if you will, in terms of how these markets kind of play and the way they operate. Okay. So if you've ever seen something like a master pattern and the master pattern technique, right? Master pattern is simply a dumbed down version of Wyckoff, right? This ultimately happens, you've got an accumulation at the green, you've got a distribution at the red, another accumulation at the green, and so on, so on. This ultimately fits into a Elliott wave, motive type wave. And then ultimately on the flip of that, you end up getting an A, which tends to come down within this range, right? So you come back for the liquidity. You then ultimately back up for what people call an imbalance or a fair value gap. And then ultimately from there, right, you tend to drop down. Now, the drop down can be measured with Fibonacci ratios. There's a lot of clustering type techniques. But in the grand scheme of things, you just look left and you get a good feel in terms of where these things are going, right? So this is something that I wanted to share, first of all. Now, in terms of, one of the things that I'm looked at, right, and I was looking at it in terms of a video name or a title for this particular stream. I probably won't call it this, but I thought this was really quite funny, and I think this is the main thing a lot of people, fail with. Obviously, it's not trying to be, you know, sarcastic to most people. I think most people almost need telling, and I think sometimes you also need to get your fingers burnt before you're willing to look at the chart with fresh eyes. Right? So, with that being said, one of the things that I think is quite, quite important, really, right, is if you think of how price and how liquidity moves, right? We're going to look at a couple of big time frames from, monthly, weekly, daily. Now, back to this particular image, right? If I've got a good understanding in terms of where we are, right? So I'm just gonna pretend I'm gonna make these things kind of up now in terms of as we go, right? This isn't gonna be kind of related to the chart, so don't jump in long because I've said, oh, this is going up, this is going down, right? And again, this is part of the problem, right? People don't understand what it is they've just watched or listened to. The biggest challenge of all is a lot of people will watch 30 seconds of a video, think, oh, you've said long or you've said short, and not really understood, the time frame, the factor, the behind the scenes dynamic of what's going in, right? If this, then that. And these are the kinds of things that take time to understand. You can't just watch, a 30-second video and go, oh, I know this inside out. So if we look at, say, a range from 1 to 2, right? And, this is what I've got here. Now, I don't care whether this is 1 or 2. This is just for the example. But what I've actually done is I've just highlighted where the bigger time frames, where the liquidity sits, right? That bigger time frame, right? Now, what I've actually gone and done is thought to myself, well, what's going on in the chart, right? I've got this kind of move down. We've got to move back up. So at this particular point, we can see breaks of structure. We can see the market shifting, the dynamic shifting overall. And then ultimately we come back down, right? Now, at this particular stage, we've actually gone and made a low. But this particular low is actually a higher low. So we've kind of failed down at this level. So as clear as day, really simple. I don't care whether this is 1 or 2, 3, 4 or 5, right? I'm looking at this now shorter time frame. The only benefit that you get by bringing in, where are we in the cycle is you're going to get a much clearer view of the overall bias, right? And the bias is key if you're looking for, 300 pips, 500 pips, right? That's brilliant. But if I was to assume that, okay, potentially this is my 2, I've had a 1, right? Come back down for a 2. Now what I'm doing is I'm looking inside of this and I'm saying, okay, well, could this be, maybe a nested move? Could we have a 1 here and a 2 there on a smaller degree? Okay, and then again, this is just the example, right? Now, what I'm looking for here is we've got to move up, we've got to pull back down. Again, this one's actually failed to break lower, so technically we're in an uptrend. And that's good enough for me. I'm on a daily time frame right now, so my bias right now is that we've actually had a leg down, we've had a pull back up, and we failed to take the low, right? So we're kind of in a decent-ish uptrend, right? So if I was to assume that this is a 2 of some sort, just for this particular video. Now, obviously I've got no indicators on, I've got nothing, other than my bias is technically I'm up, right? I'm looking at this as a long perspective. What I now want to do is to look a little bit closer, in terms of the chart and say to myself, okay, from that low, what have we had? We've had moves up, right? And we're still moving up, okay? Now, if we look at what we've done overall, we've actually come up to a high. And it's the first time in the overall move, right? From here, it's the first time that we've actually changed the character to the downside, right? And by that, what I mean is we've come down, we've failed to go up. So just like we failed to go down, and then ultimately we break and take a new lower low, right? So without again overcomplicating it, what we've actually got so far is we've now got one of 2 things. We've either got this move where ultimately we fail at this level, and we start to drop down, or we take this level, giving us now a move back to the upside, and we then look to continue on up, right? Now, this is where it gets a little bit more complicated, and this is ultimately for another video, right? But if we were to look at this and say, okay, well, what have we actually done? What are we actually doing? Well, we're technically in an uptrend, but we've actually seen this change of character on this smaller degree, right? So all I want to do now is drop down to a smaller time frame again. Okay. Now, on this smaller time frame, I talked about this last week. This is one of the posts. These two lines can go now. Right? I talked about these two areas in terms of if this, then that, right? Which is why when you make these public videos, it's an awful lot more complicated to ultimately give people the understanding when they haven't gone through, the education. And and actually, what I'm going to do, I'm going to put some kind of shameless plug into this. This coming Friday, I've actually got an event. I'll put this in the link, obviously in the description down below. I've got an event working with Wiley Publishers, and this is actually going to be Friday evening, a 2 hour session followed by a half-hour kind of Q&A session. And ultimately, we're going to be going through a lot more detail in terms of what I'm currently covering in this video and what I've gone through in the first book, before ultimately finishing off with what the second book is kind of targeting, what it's aimed at, and what kind of problems that actually fixes. So anyway, back to this. So in terms of where we are, right? I'm looking at this and saying, well, we're in technically a downtrend until we're not, right? Which sounds pretty obvious. We've had a pullback and we failed. We've ultimately come back through. Right? However, we've now come and we've changed the character to the upside. So at the moment, the biggest question I have to ask is, where is the liquidity to the upside? Right? Well, here. So if we start to see signs of weakness as we near this level, right? I'll be dropping down a time frame again. So I might go to the 1 hour, I might go to the 15 minute, right? And then ultimately, all I'm doing is following the trend path, right? Now, there's nothing stopping me taking a counter trend trade on a smaller time frame if we've grabbed liquidity and we ultimately want to fall back down, right? Obviously, as I explained earlier, we've had some kind of accumulation. We then ultimately come for the distribution, another accumulation, a distribution, right? So you can take these on these smaller time frames without complicating anything. And this is the bit that I think a lot of people seem to struggle with. These are the things a lot of people seem to fail at, right? So I'm not bothered by taking these counter trend trades on a smaller time frame. However, what becomes a lot more lucrative is when these time frames actually align with each other. So for me, one of the best trade setups, if I was to say, hey, we're going long and we're longer for the long time, right? Because this ultimately starts to change its character on this smaller degree, is we pierce through here, right? We then ultimately come back down for the retest, and then we have a move to the upside to continue on up. Right? That there is the type of entry I would like. That's the type of deal that ultimately all time frames align. Okay. However, that also doesn't stop me from saying, well, the forecast that I have didn't play itself out. Let me take a short in the opposing direction if this, and this pans out. Okay. So all you're doing is working with the chart, working with the time frame. Now, again, as I said about 8 monitors, 20 different instruments, 20 different indicators, you start to do this with one pair. You start to do this with something like Euro or Aussie. You're going to start to learn It's little character traits, right? It's just like learning a language. So, with all that kind of being said, what I'm looking for right now is one of two things. Do we sweep liquidity and break down? Do we sweep liquidity, come back to retest, and continue on up? The signs are going to be in there as you start to drill down into the time frames. And again, this is something for a different video. This for me is just kind of giving you the kind of the wake up call in terms of what you're looking for. Right? Now, you know, I've showed videos over the last probably 18 months or so, well, probably even longer than that, but I've showed things like footprints, right? I've showed things like, how this works from CVD, how these kind of liquidity pockets kind of come into play, where ultimately things like the numbers, right, where all these little numbers, what all these things kind of mean in terms of the chart, right? I've put all these things together. Now, obviously, I'm still trying to show you guys, again, just the wake up call in terms of you don't need to predict, 6, 8, 12 months. Although things like, Bitcoin, a lot of people have this cult like association to it. And you say anything like Bitcoin's going down or Bitcoin isn't going to 100K just yet, and people just switch off, right? In the grand scheme of things, once you understand how this liquidity map plays itself out, it's so much easier on any time frame, on any chart, for any instrument, right? Now, again, just to finish with, right, how these things are connected. I've even posted, and I'll put this link into the description again. I've even posted things like this post here, right? Smart money, and ultimately what's behind smart money, right? So a lot of people don't seem to understand the relationship, the dynamic, the partnership between smart money concepts and these kind of order blocks and fair value gaps and all these types of things, and ultimately what it means for volume. The CVD, the footprint charts, the depth of market type tools. These things are the same the same data, just represented in a different way, right? And this ultimately is something that once you get to grips with how the market dynamic is moving, you don't need much of a clue in terms of what the numbers look like, right? The only thing that you get in terms of an advantage by understanding the numbers is a little bit like the volume profile on the x-axis, is that if you end up with, say, a large candle, little volume, or, we'll end up with large volume, little candle, it can kind of give you some hints that something isn't quite right, something is off, and ultimately something's about to happen or something's about to change, right? So, in the grand scheme of things, look, right, all you're looking for is a continuation one way or a reversal the other way. And then what you can do is you can start to drill into where the liquidity sits, where the key areas are, where you've got these gaps, where you've got these, consolidation zones, where the auction areas are, and this, that, and the other, right? So for me right now, what I'm actually seeing, and even just looking at this chart with the current point of control, is I got a sneaky feeling we've got some big numbers out, I think, tomorrow. And ultimately, maybe expectations rather than numbers, this is probably the correct way to put that, is I got a sneaky feeling, we could play around this area. We might even spike up, right? And then I think, the target area at the moment is here. I can't see much logic for the continuation on up without taking the liquidity under this area first to drive that particular move up, right? So I know this is only euro and this is only one example, but these are the kinds of things, like I'm saying, is I want you to start, thinking about. And if you're following us, if you're obviously in the Discord server, whether or not you attend this event, it doesn't matter to me, right? The point being is I want you guys to start to think a little bit differently than trading on these tiny time frames with loads of indicators, ridiculous amount of instruments and pairs and tools and so on. And just take a step back, take a bit of a breather, right? And once you start to realize less is more, your whole trading psychology changes. All right. So anyway, I'm going to finish like that. Thanks for watching, and I'll see you on the next stream. Cheers, guys.